All right, we've hit a lot here this afternoon. We've been talking commodities, we talked stocks, of course, the economy, and we've got another pretty big event coming up this month, which is the first debate between the new set of candidates. Kathy Jones joins me alongside Mike Townsend. Kathy's a chief fixed income strategist, and Mike's the managing director of legislative and regulatory affairs. All right, we got a debate next week. Mike, is this type of thing that could show up in markets?
I think it's huge for the race itself, whether it's going to influence the markets. I think you'll see some policy discussion around taxes and tariffs and things that the markets are interested in. But I think mostly it's an opportunity for particularly Vice President Harris to kind of introduce herself to a lot of voters who maybe don't know much about her and her positions, and to see her go head to head with Donald Trump for the first time. I think it'll be really interesting. I don't know that the markets are going to take a ton away, but taxes and tariffs are definitely sort of at the front of the debate right now, and I expect that to continue next week.
Yeah, we've got a little more detail, right? Because you and I a couple months ago were sort of lamenting the lack of economic discussion around this whole thing. But in the last couple of weeks, we've got a few, right? A couple tidbits here on taxes.
Yeah, I mean, it's been a pretty big discussion over the last couple of weeks, whether you're talking about ending the taxation of tips or yesterday, I think pretty notable that Harris broke with the Biden plan when it comes to capital gains. And she would set a lower top capital gains rate. It would still go up from where it is now, but lower than what Biden has proposed. But Oliver, when you're talking taxes and all of these kinds of issues, you got to remember that it's Congress that's going to have to figure this out. I mean, you can't do an executive order on taxes. So these are all just proposals for the campaign, for the starting point of the discussion that's going to happen next year. And next year is going to be a huge year for a tax debate because of all those expiring tax cuts from 2017. So lots of discussion to come, but it's going to take a while. It's not something that can be done overnight.
Hey, quick, Mike, what's the latest on whatever your favorite poll or calculus is?
Yeah, I'd like to look at kind of averages of polls so you don't kind of put too much weight into any one poll. And this race is tied, Oliver. You look at the 7 battleground states, all 7 of them are in toss-up categories. It's incredible. You look at some of the averages, they're like 0.3% apart, 0.4%. Wow. It's incredibly close. And I think it's going to be that way right up until November.
It's going to be a disaster. All right. Okay. Also, speaking of coin flips, Kathy Jones, I mean, we're almost getting there for 50 basis points. I mean, above 40%. Bonds just continue to rally here. We got good services data. Treasury bulls just powered through it. Is there any end in sight to their appetite, Kathy?
I think all roads still lead to lower yields. That's ISM services report was okay, but under the surface, it wasn't all that strong, particularly the employment index. So it barely budged, and it is certainly down from the peak levels we saw about a year ago. But when you look at where inflation is going, where commodity prices are telling us inflation is headed, and the slowdown we're seeing in several parts of the economy, and then the worries over the job market, it's really tough to say what the catalyst would be for higher rates. So I do think we go lower from here, but I think it's mostly short end and the belly of the curve that follows the Fed and rate cuts rather than, the long end feeling it very much unless we go into recession. As for 25 or 50, I am sticking with 25. There's no formula here. There's no algebra equation you can apply to this. It's a judgment call, right, amongst the voters at the FOMC. And from what we're hearing, there are probably several that are on board with 50, but there's also several that wouldn't be on board with 50. So I'm going to land on the side of 25, but either way, it doesn't make a whole lot of difference.
Looking at the implications of jobs tomorrow, Kathy, if we get a number in the low 100s, where do you think those odds of 50 go by the weekend?
Well, I think if it's a number that's short of expectations, because the consensus is around 160 as a rebound from last month. So if it's in the low 100s, I think the odds in the market will go up considerably. Will it change the minds of the people at the Fed? I think you'll have to look at underlying things like hours worked. So people may have held on to their jobs, but the employer is giving them fewer hours. That means income goes down. That means less spending in the economy. That's usually a precursor to layoffs. So I think the underlying data may tell us more than just the payroll number, but a low number would certainly push probably a few more people into the 50 camp. But again, you're trying to read minds here when you guess what they're going to do.
Hey, speaking of reading minds, I got one for you, Mike. If you are running for president from the party that's in power right now, do you want 50 basis points, or is that going to give your opponent an opportunity to say, look, the economy's falling apart here?
Yeah, I think it's a little of both, right? It would probably juice things for the Democrats, and it would set up the Republicans to say the Fed is meddling in the race. So like everything in election season, it probably cuts both ways, and it's all in the eye of the beholder.
So many things seems like it just won't change people's minds, but we're trying to figure it out anyway. Not that it shouldn't, right? Okay, thanks, Mike. Thanks, Kathy. Appreciate the analysis, guys. Good stuff there on bonds and policy.